I want to welcome everyone to Global Markets Radio Week Ahead Show. I'm your host, Andrew Spanton. Sunday, just about 4 p.m. Eastern. Nothing really major over the weekend to report. Obviously, the Chinese numbers, very, very good. Industrial production, better than expected, just slightly, but still, market's going to like that. 13.3% on the upside. CPI very high. They're going to have to raise rates, and the market pretty much discounting that, don't go too far, too fast, just because of inflation. But the Chinese clearly worried about inflation. Looking at the S&P chart, as you see here, there's lots of data this week, people, coming up. But it certainly looks like with the way they close the S&Ps, we are gone. This is the major Fibonacci move you see here from the highs back in '07 to the lows in '09. We have now taken out 61% retracement. We are gone, at least from a Fibonacci standpoint, we should be. Major close on Friday. Any technician, how you can be bearish, beyond me. I want to show you that monthly because you really couldn't see it on the weekly. But you see here the weekly chart again. That's the same Fibonacci level we saw before, and we are gone. Cup with handle. I mean, listen, I'm the biggest bear you're going to meet, but you don't want to get run over. And that's what it looks like is going on here. Weekly chart, crude, nice reversal there. I think crude's a short. Again, with bond yields going up like this, metals, should not necessarily be so strong. The weekly chart in gold, not looking very good, but the daily chart makes me a little nervous. Daily chart looks like a possible nice little reversal there on Friday. But still, I think this channel line we come down to, I think there's a lot of longs that can get squeezed out. I still think we can have a year-end rally, but from what levels? So, again, this weekly chart is a big-time reversal, in my opinion. And you see here from 4 weeks ago, we continued. So I think this 1350 level certainly is attainable. Just because the stock market's going up a little bit doesn't mean gold can't come in. Absolutely. And, again, bond yields is what you want to be watching. There's a weekly chart here. We are in a free fall. I got channel line support. I think this week maybe we find a little support. Bond yields top out maybe. 10-year, 350. But this will be a major move down to 116, 117 level for sure. But certainly round trip. And we get the numbers coming out of the U.S. side. A lot of data coming out. Obviously, Bernanke, he's the key statement on Tuesday. I think that's when you probably have a reversal in the bond market. The FOMC rate decision is more the statement, how much more he's going to buy. Any comments on recent bond moves, I think Bernanke's going to make some sort of a comment on it. And any reversal, I think, probably happens around then. We got 2 full days on that. So we've come in a long way on bond prices, bond yields up. But, again, look for this level right here for support. Tuesday, turnaround Tuesday in the bond market, maybe till year end. And, again, that should mean gold prices reversing as well. But, again, with these S&Ps going out like this, maybe it'll be Tuesday we have a reversal, but we are gone. Gone, and let me tell you something. I've seen this before. 1999, if you've been a trader back in 1999, holy crap. They just kept going once they found a bottom, and they just kept going to the end of the year. And the way we broke out, we could just drift higher. As far as the numbers coming out this week, this is a dollar index you see here. Numbers coming out this week, a lot of data coming out of the U.S. Again, Tuesday retail sales, that's going to be big. We've got German ZOO and IFO bookending the week. But U.S. retail sales, PPI, FOMC on Tuesday. Wednesday for the U.S., big numbers there as well. CPI, Empire Manufacturing, foreign flows of capital, capacity utilization, industrial production, housing market index, crude inventories. Big Wednesday. And then Tuesday on the U.S. side, building permits, unemployment claims, current account, housing start, Philly Fed. Wow, a lot of data. And remember, the 15th is a key date for the U.S. That is when if they don't get this thing through, this bill passed, this big partisan bill passed, government's not going to be able to increase the deficit, and market's going to get roiled. Japanese Tonkin on Wednesday morning in Asia, that should be important as well. But really, the FOMC and that Wednesday deadline for the Congress to get this thing done, very important. Looking at the dollar index weekly chart, certainly made a little bit of comeback last week. But it does look like this 79 level is key. We could roll over. Again, let's see what Bernanke says. But on a weekly basis, dollar index certainly holding its own. But again, above this whole below 79, say goodnight. Above 81.50, say hello and get along. But looks to me like we are rolling over a little bit. And again, I think positioning in the euro, a lot of positioning short euro dollar, euro, I think that could be squeezed. And we haven't really gotten anything over the weekend from the ECB, or we get Trichet tonight, I believe. Yes, we do get Trichet in the U.S. session, actually. But looking at this euro-dollar weekly chart, should we take out 34.10 to the upside, we're going up nicely. So nice little possible hammer here, obviously the week before, but you need bullish engulfing. We should not take out this low of 32.75. I'm sorry, 29.75. This is obviously a big spot. Could it be a triple top? Absolutely. Did it hit it? No. But look at this weekly. Very big spot again for the euro shorts to see some follow through. But if we can hold, if we take this out to the upside, I'm getting long. Asset prices going up. Dollar yen is another one. You look at that weekly chart, it looks like it's trying to turn. I understand, listen, a lot of people are bearish on this, and I agree. I am bearish on dollar yen. I do not think the low is in. But this looks good. This whole weekly rollover from this outside candle, it took out the highs, lows. We were very bearish on it. Now with the weekly chart, we got to get bullish. And especially above 84.10, 84.20, this baby could cook. Look at that 200-day moving averages in dollar yen. And again, you look at this channel line also. Wow. Certainly 85. I don't see why we can't get up there. So dollar yen, you get bond yields more to the upside, which I think is coming. Dollar yen should be up. Looking at sterling, remember, these are all weekly charts, 10, 20, 30, exponential moving average. Again, you can all try my premium service for free for 1 week, baby. Just sign up right in front of your face. Click on that PayPal link. You get a 1 week free trial, and you're not charged. It's free. But, again, after the week, then you are billed at $200 a month. Looking at sterling dollar weekly chart. Listen, euro sterling looks terrible. We'll look at that in a second. But cable looks like it may have found a bottom. Certainly 160 could be in the cards. Weekly chart, it looks good. No major opinion, though. Again, dollar Swiss, another one on a weekly chart. No follow-through from previous week. But, again, the rally failed. And you got to watch that dollar index at 79.10. We break 79.10, say goodbye. But certainly with asset prices going up, you got to be looking to sell. We got an SMB rate decision as well. That statement should be interesting. Aussie dollar with the Chinese data good. Aussie dollar hung in there last week. I would imagine this Aussie dollar is a buy on pullback. Should we take out previous week low, though? Should we take out this whole 79.50 level? You got to run like the wind. But this Aussie dollar, if gold could find a bottom, if the stock markets are going to explode, China data was good. Remember, the jobs number last week was amazing. Yeah, there's a story about retail sales being weaker for Christmas. We'll see. But this Aussie dollar, the weekly chart, certainly above 99.50 is a long. To the moon. They might even close this thing at 105 on the year. Dollar Canada, another one. Weekly chart, really gone nowhere in the last 5-6 weeks. We're in the 300 pip range. Again, I think dollar Canada closing above 102.50 would be very bullish. And closing below par, obviously, would be very bearish. I am more of a bear, but again, I'm bearish on gold. I'm bearish on oil. I'm bearish on commodities. These babies might not go somewhere fast. They might actually, be very well contained. So be very much focused on metal prices and U.S. bond yields for direction in the commodity currencies this week for sure. New Zealand, another one, possible double bottom at 74. We take out 76, 75. It's a long. Again, wait for that gold reversal probably on Tuesday. And again, if you have any questions, email info@globalfxradio.com. Big week. Outside any major announcement or news geopolitical event, it looks to me like, again, Tuesday's going to be a big day for a reversal. And who knows where the S&Ps will be by then. And dollar looks like it's going lower. Commodity prices, though, in my opinion, going lower as well. It's going to be a very mixed day. Watch those bond yields. Dollar yen, I love it. Euro sterling looking like it's going lower. Andrew Spanton, The only voice you'll ever need who truly loves to make you money.